Good morning, good afternoon, good evening. Welcome to the Supply Chain Risk Management Consortium's fifth in a series of webinars on building a resilient enterprise, mastering supply chain maturity and risk management, moving from stage 4, data decision making, to stage 5, optimize ecosystem. We hope that your family are healthy and safe, and we appreciate you coming in today to join us and attend today's webinar on building that resilient enterprise for you. This is the fifth in the series of webinars in this series. Our first one focused on looking at the overall stages of the Gartners and aligning it to the supply chain maturity model and identifying the wall. Then we went into stage 1 and 2. Stage 1 being ad hoc management to optimistic silos. Then we got to stage 3, centralized and repeatable operations, and stage 4, data decision making. Now we're at the pinnacle, at the stage 5, moving from data decision making to the optimized ecosystem. And our next webinar in the end of May will be on the optimized ecosystem, focusing on roadmaps and lots of case studies to achieve supply chain risk and resiliency. With that, just wanted to welcome Greg to the webinar. He, of course, is the founder of Supply Chain Risk Management Consortium with over 40 years of experience, and his book, The Supply Chain Risk Management and an Emerging Discipline, back in 2015, ahead of his time here. My background is the CSO for the Supply Chain Risk Management Consortium, and I am the founder of Enhance International Group, a group of 70 exemplar companies throughout the world. With that, I think we're just going to get right on to the deliverables today. Today, we'll get into the insights to build a resilient enterprise from the stage 4 data decision making, where we left off last time. And then we'll talk about overcoming those barriers to increase operational stability and the roadmap to stability. The other deliverables, of course, is providing you a success story of a company that moved from stage 4 to stage 5. And then we'll look at the financial payoffs and what's the return. So what's the give to get when you get to stage 5? Is it worth the squeeze to put all that effort into your company to make it more mature? With that, Greg, you kick us off.
You bet. Pleasure to be here with you today to talk about our passion. We like to give everyone a thumbnail sketch of the Supply Chain Risk Management Consortium. This is who we are, what we do. On the right-hand side, we have more or less 3 pillars that we think about it in 3 pillars. In the middle is education. We grew up with educating at the university level and in workshops. We have a host of education organization partners. In the middle, we do a lot of consulting. We lead, guide, direct, and coach companies on their supply chain risk and resiliency journey. And then on the far right, we have a host of cloud-based software as a solution or as a service, and they are geared totally towards reinforcing supply chain risk and resiliency visions from our book. So education, consulting, and software for heavy lifting implementation. On the left, kind of have 5 areas: product, services. We have 2 online education courses, which result in a certificate of achievement. They're self-paced. They're on a learning management system. One is basic supply chain risk and resilience, pretty much for manufacturers, and the other is content sprinkled in with public healthcare services and logistics. So we have 2 at the moment. We do a lot of coaching, as we mentioned. We have platform solutions to do the heavy lifting. And then we have 2 online assessments, which we'll talk about today. One is called Supply Chain Management Online, Online Readiness Assessment. It essentially evaluates your supply chain process maturity and a little bit of inherent risk, and we'll talk about that today. And then we have a newer version, which is geared around pure risk That's called the 90-day action plan. And essentially it identifies where you are in a risk maturity model, who you are in terms of your risk appetite, and what type of operating culture you have, all using AI ML algorithms. So with that, that's a quick thumbnail sketch of the Supply Chain Risk Management Consortium. Back to you, Jim.
Thanks, Greg. And a little bit background on Enhance International Group. We're a group of about 70 partners across the world. Uh, and we focus on people, process, data, technology. We're like the Swiss Army knife of solving problems and enabling companies to perform at a much higher level. Of course, supply chain and supply chain risk and resiliency is a big piece of that. That's why we're supporting these webinars, and we appreciate everybody's time. What we have here is a bicycle slide, and this actually relates a little bit to today's webinar. So you might want to look at this a little carefully. Strategy moves at a slower speed, and your wheel hopefully moves a little bit faster than you're pedaling. Otherwise, you might be hurting yourself. So that's the whole idea here of strategy and execution. And we'll be seeing that later when we get to the theory of constraints. With that, we're just going to get right to it. Greg,
Mhm. Yep, you
will
bet.
kick us off here with
Yep. Yeah, we just thought we're talking about supply chain process maturity today, along with risk and resilient enterprises. We thought we'd share this with you. This comes from Gartner. They do this every year for the last, what, Jim, 20 years at least,
Mhm.
where they codify the top 25 supply chains around the globe. A very rigorous kind of survey questionnaire and follow-up. You can see the top 10 from Schneider Electric to Lenovo. That's a former IBM PC group. But what I really wanted to mention here is they also have masters. They identify normally 4 or 5 masters of supply chain process maturity. They're not on this slide, but they are guys like Amazon, Apple, P&G, and Unilever. All right, so there are folks out there who have mastered supply chain process maturity and are leveraging it. So we just wanted to inject that for your reading pleasure, and then essentially we can start going on to our agenda. Our first section is basically understanding the Gartner 5-stage maturity model, building a foundational success, and essentially I'll turn it back to Jim.
Oh, okay.
Oh, sorry.
Yeah, you can keep going, Greg.
All right. Yep. Yep, I'm sorry. We have a next section on 3 dimensions. We call it the cube, and we want to invigorate that and re-inject that into the dialogue. Then our third section will be aligning our supply chain management assessment tiers, tier 2 and 3, to drive stable business growth. We'll give you some sense of what that looks like. Then our next section is real world case studies, where Jim mentioned we have a client who has moved from, in our opinion, stage 4 to 5, and is pretty mature in terms of supply chain and risk. And then finally, we'll end up with what we call a profit pathway, turning supply chain maturity into a revenue engine. So sorry, with that, I will turn it over to Jim now.
All right, Greg. All right, so here we go. So understanding the 5-stage maturity model that was built in the 1990s and still holds true today. So the question is, how do you create a resilient company? That's the $50 million question, or I guess now it's got to be $1 trillion question. Otherwise, it doesn't hit the decimal points in the right place today. So on this Gartner model that they developed is on the y-axis. We look at mindset from inside out to outside in. So less mature companies are looking internally. They're not looking outside, and mature companies are looking outside, as you can see there. And the target on the bottom, on the x-axis, you can see Stage one, you're trying just to get it out the door on the service stage one. So you're looking at service there, but you're looking at service at any cost. And then you focus on cost. So you move to the left, and then it's a cost out basis, but you're not really looking at margin. You're not looking at your customer. And that's why you round up onto stage four and you start looking at customer value. And then you look at a network ecosystem like the Amazons and the Apples of the world, the professionals. So with that, I'd like to walk through the stages and just kind of identify the outcomes. So again, the outcome on stage one is it's generally in the startup nature. You might have one business unit, maybe multiple business units forming your company, but it's not really scalable. Everybody's fighting to stay alive. But it's not really to be adaptable. It'd be very expensive. It's just again not scalable. But there's a big focus on revenue and delivering to the customer at any cost. That's the way I look at it and what I've seen. And so then when you get to stage two and three, you're trying to standardize, but you figure out that one size doesn't fit all. And you're looking at locally scalable, but not adaptable processes. So you have a bunch of plants and they're all doing different things. And you're trying to get them all onto one ecosystem or one centralized uh, uh, group of processes. And then the outcome, if you're above stage three, is you're actually optimizing and you're getting to that scalable and you're looking at that value does equal profit. And then when you get to stage five, you are, of course, scalable, value centric, outcome adaptable, and focused on margin to serve. So as you move through here, you know, many companies, what I call the 1, 2, 3 step, they'll go in and it's kind of linear as far as improvements go. When all the improvement programs I've been involved with, it's easier to move from stage 1 to 2, 2 to 3. But when you get to 3, you hit a wall. And why? Because it's a completely mindset change, as it says, Gartner said 20 years ago. It's a mindset change you got to make from inside out and outside in. And generally, quite frankly, the organization leaders and middle management don't have that mindset. So you really have to bring somebody from the outside in to twist that around and bring that outside in mindset to get to the point where you become scalable, which is what everybody wants to be, but aren't really up until that stage. So that's a little bit of an overview of the 5-stage model. With that, we're going to focus on the 4th stage in particular, in that you're aligning to the analytics and the measurable insights to drive consistent improvements and decisions. So with that stage, you know, your complexion is the performance is measured, monitored, and optimized. So you're really able to optimize things. Data insights are leveraged. You drive some continuous improvements. So you have some kind of an ecosystem that you're trying to build. People are working together. This is a great stage to be in. If you've kind of overcome the wall, so you said, oh, I cleared the wall, we have that centralized ecosystem. You have your enterprise information management. You have your data accuracy. You believe the data. You have those centralized systems. You're able to do advanced analytics, and you're leveraging best practices across your enterprise, and you're optimizing your decision making. So here you are getting a scalable, value-centric, adaptable, and focused margin to serve ecosystem. But you're not quite there yet because it's more internal. You have some external, maybe your first tier suppliers, maybe your customers, you're talking, but your customers may not be necessarily connected to your suppliers. But here in the 5th stage model, when you achieve this, you're much more agile and innovative, and you're operating at advanced capabilities, and everybody wants to work with you. Your suppliers want to work with you. Your customers want to work with you. It's like people are standing in line. You're the natural choice for everybody. and you're the benchmark. You're the leader in that industry, in your industry, and everybody's chasing you. And what you find here is because you're able to get to this stage, you're able to be much more powerful, and you're actually buying companies on the downturn. You're looking for disruption as opportunities. When we talk about opportunities, you're sustaining innovation and agility while managing that complexity. So the complexity, you look at complexity as an opportunity. You don't look at it as something that costs you money. You look at it as something that makes you money. So that's a big change in mindset, and you're actually able to deliver that. So in this, you're getting this positive margin growth, and I've seen market shares uh, go from 30, 40% to 60% for companies that are in this stage. With that, we're going to switch it around here. And in light of these tariffs, what actions are you taking to make your supply chain more resilient? So we have some folks entering some things in. So thank you. We have network analysis, maybe following suppliers, efficient, client stories, communication, supply chain visibility. Greg, your thoughts on this?
Yeah, you bet, especially on supply chain visibility. I mean, we always talk about the VUCA world, volatility, uncertainty, complexity, and ambiguity. It has really gotten into the VUCA world right now. It's a tough one, but especially with supply chain visibility upstream and downstream, you got to stay close to your suppliers and your customers on a daily basis at the moment until this thing settles down a little bit.
Excellent. Well, keep entering in. We're gonna come back to this a little bit later. I love it. Just keep entering in your thoughts. And
Yep, appreciate it, the engagement.
if you see something up there you like, enter in those same words, and then it'll become bigger. That's how word cloud works. So don't be dismayed by it already being there. You can reinforce it. So thank you so much. And also enter in the chat if you aren't able to get to the poll EV. Uh, that'll be great. Thanks so much. Keep going at it. Great. Change management, I think I see in there. Yeah. A little bit of change management goes a long way. That's a great one. All right. With that, we'll
Yep.
go back to the webinar. Greg?
Yepper, you bet. Our second section, now that Jim gave you a little overview of the Gartner five-stage model, we want to revisit what we've been talking about, kind of our three dimensions of stable growth. We call it affectionately the cube, and we want to revisit the three elements of the cube and then give you some insight on something completely new as well. So the first of the three dimensions in our cube, which we profiled in previous webinars, is our supply chain management assessment tool. Just to give you a real quick thumbnail sketch, if you haven't been on this series with us, the tool was born out of a first-of-a-kind MBA class. The class was geared around supply chain risk management at Lehigh University here in the States in Bethlehem, Pennsylvania. It was so well received over a period of time, we took it on the road. The tool's been operating with us for about 10 years. We utilize it still in classrooms, in workshops, in webinars, and even with client engagements. Now we have several versions, but we use it and we talk about it. It's a good dialogue starter, and we've upgraded the tool within an LMS system. Used to be Excel way back when. It's now in a learning management system in a platform, and so it's been codified and pretty well structured. What's it look like? On the left, this is what you get out of the free assessment tool. You get kind of a Likert type chart. It has 13 tenets. They're color coded, as you can see. If you go around the clock from 12 o'clock and go clockwise, we have three blue strategic tenets: leadership, balance, scorecard, intentional redundancies. Then we turn 5 more on the right-hand side into what we call tactical opportunities and or tenets that you normally run in a supply chain. And then on the left, we have the green tenets, which are operational, which are things you're doing every hour of every day. So strategic, tactical, and operational. What does it measure? Measures 2 things. It measures your supply chain process maturity and your inherent risk within those processes. It does not measure supplier 22 is at risk. That's not what it does. We're talking about supply chain processes that you run every day. All right. How do you read it? Well, you can see the black line are the answers to the questions. So that the black line represents the as is situation that an individual has documented through answering the questions. How do you measure? Well, the closer you are, the closer that black line is to the center of the graph, the more mature that process is and the less inherent risk. Then vice versa. All right, the farther away that black line is from the center, the less mature that process is from a best-in-class methodology, and the higher the risk. We also then measure risk. Risk is measured geared around 3 circles. One, close in, is the green. That's where the exemplars tend to operate, and we'll show you a case study in a minute. That's where the exemplars tend to operate. They mitigate their risk. All right, so if you're operating in and around that green circle, you have very mature processes, and you still have some risks, but they're much lower. Going from green to orange, that essentially says you have less mature processes and you have more inherent risk. Then from the orange circle to the red circle and beyond, that is where you again have I'll say low process maturity and high risk. And if you're at or beyond the red circle, which we affectionately call the ring of fire, you have very, very immature processes, and those processes are at risk. So the beauty of this is you get a real quick report. It's pretty simple. It's a dialogue starter. You can do it individually or you can do it as a group. And the beauty is it's free. You can see the URL up the top. If you can't get in with the URL, you could certainly visit our website and find it. So that is the first of 3 dimensions of resilient enterprise from our point of view. The next one. Second dimension is what we call our 21st century supply chain risk and resiliency maturity model. Let's take a look. On the left side, on the y-axis, is supply chain risk and resiliency maturity as we see it from low to high, bottom to top. On the x-axis is competitive advantage, normally timed from time 0 to infinity. We have 5 stages. First stage on the bottom left is foundational. You're experiencing that now. Foundational is really get educated, understand what the best-in-class processes are, all right, and become aware. All right. After foundation, second stage is visibility. We think that's very important. What do we mean by visibility? Getting better in visibility upstream to your suppliers and downstream to your customers. Don't forget your customers. They have the same type of risks that your suppliers can have. Many of us don't think of customers in terms of risk. Third stage, predictability. We're not talking about predicting the next earthquake or weather. That's not what we're talking about. We're talking about digitizing your supply chain. Every supply chain can be digitized. We advocate digitizing it in a model. Why? To do what if scenarios so that you can start to see the impact of losing a supplier, late delivery. You can see financial aspects of a risk event, and also you can build out mitigation plans. 4th stage, resiliency. This is where we advocate you embed what you're doing into your daily supply chain decision making. And then finally, up top, sustainability. It's not maybe what you think. We're not talking about going green here. We're talking about when you get small and medium-sized wins, then you take those wins and expand it throughout either your full division and or your entire enterprise, how to do that. All right. We also then on the bottom tend to depict a heat map on the bottom on the x-axis, meaning the farther you move up the maturity model, the less inherent risks your supply chain will have. We have a mantra on the top. You'll hear us talk about that 100 times. Identify the risk, assess the risk, mitigate the risk, and manage the risk. And then we always pose the rhetorical question, where are you and your organization or your plant division, where are you on our supply chain risk and resiliency maturity model? All right. The third aspect, third dimension of our cube is the balance scorecard. We think it's pretty good. It has 4 basic elements: financial, customer, internal, and growth. We wanted to share it with you again to give you a picture. The first and second of the 4 are first is financial, and that is, how does the company look to the shareholders? You know, what do they expect? And you build out goals to measure that. On the second element of balanced scorecard is customer perspective. How do we look to the customer? What are our customers' expectations? So it's kind of an outside in. All right. Then the third and fourth element on the right side of a balanced scorecard, the third is internal business perspective, meaning what do we as employees of the company, what must we excel at? What do we have to do well? And then you can build out goals that measure that. And finally, on the bottom, a growth and learning perspective. How can we continue to improve and create value as employees? You get employee motivation, you upskill your employees to keep them, and so forth and so on. We think it's a good inside out, outside in balanced scorecard. That's why they call it such. On the top right, we have a kind of a cascading approach. We'll just show it to you. We think it's pretty good, where you start very high level with the 4 elements that we just talked about. Then you can start cascading those frameworks and perspectives down through your organization. And you can talk about areas of risk, where the risks are. You can talk about the type of risks, strategic, tactical, and operational. And then we have a host of KPIs and KRIs, key risk indicators. So we think this is a good third dimension of a resilient enterprise because it's a good closed loop framework. So with that, I think I'll turn it back to Jim.
Thanks, Greg. So we're gonna talk about another concept here, that when you get to stage 5, you're looking at, and probably stage 4, definitely helping you move from stage 4 to 5 is what Peter Singe came up with back in 2000 or 1990, I guess, from MIT. So we look at it's called The Fifth Discipline. Is a great book for everybody to read if you haven't read it. And it focuses on problem solving using this methodology, systems thinking, in order to convert companies into learning organizations that learn to create results that matter as an organization. There's 5 disciplines represented: classical approaches, theories, and methods for developing 3 core timeless learning capabilities: fostering aspiration, developing reflective conversation, and understanding complexity. This is pretty involved. We talk about a growing action and a slowing action. They have 11. Peter has 11 laws of the 5th discipline. I'll just name a few of them just to get you started here. Today's problems come from yesterday's solutions. There is no blame. The cure can be worse than the disease. I like that one. Faster is slower. So sometimes we hurry up to go fast. You ever hear that saying? We hurry up to go fast, but we end up slowing things down. It's a very common paradigm that you see a lot is hurry up so we can wait, is another phrase that often comes up. And behavior grows better before it grows worse. And one of the things I just saw in his video recently was, we have to go in and say, we're going to make mistakes, and we have to have an open kind of, open system or open dialogue with all of our employees that we're going to, we know we're going to make mistakes, but it's with mistakes we learn. So the growth loop is a reinforcing loop as it pertains to the tariffs. Many economies like South Korea, Mexico, and the EU have sustained economic growth fueled by exports. As we know, this creates a positive feedback loop: more exports, more GDP growth, and production capacity, more exports. The limiting growth, the slowing action there, but that growth hits a limit when external forces intervene, such as, tariffs, geopolitical tensions, or supply chain disruptions. These act as slowing actions in the systems. They constrain growth, shift incentives, and force adaptation. So, like finding new partners, reshoring, manufacturing, that's what we're living through right now. So, Singe's model emphasizes that actions to push growth through trigger counter reactions that limit it. And for today's reality, of course, the Trump tariff policies represent a classic balancing loop that reigns in the free market momentum of global tariffs. So we thought we'd throw that in there. Companies that are, again, that are at stage 4 and stage 5 are well aware of these ecosystems and are taking them on every day as part of their the way that they operate. So we're going to throw out another thing that comes from our friends at Demand Driven Institute about S&OP, which is the heartbeat of your company. And they have 2 ways to look at it. They look at the demand driven S&OP and the adaptive S&OP, right? Sales and operations planning, S&OP. So the DD, the demand-driven S&OP loop focuses on the tactical aspects of aligning planning and operations. So that's going from your middle management down to your operations, and in real-time demand, how are you optimizing every day? And then you have this adaptive response of strategic actions that is moving at a slower momentum, but is trying to drive that feedback. So finding this balance between these 2 loops in your company is the momentum that drives your company for better or worse. So when these are out of sync, your company's out of sync. When they're in sync, you're able to move fast. So you see the companies from maturity level 4 to 5, those companies understand this and are linking these 2 together in the way that they operate. And we often call it linking the strategic, tactical, and operational perspectives together to drive that, as Greg just mentioned in the balance scorecard. With that, I'll turn it back over to Greg.
You bet. Thanks, Jim. We now come this discussion, systems thinking, strategic, tactical, and operational threads. This kind of leads us to a new concept that we're embracing, and that is trust, folks, especially relative to what's going on now around the multipolar globe with tariffs. So that we look at trust at the moment as the new catalyst for our 3-dimensional cube. And we want to kind of share some of our thoughts about trust and what we're going to be doing with supply chain trust over the next 6 months. So just a couple of quotes to get you grounded. We like Steve Covey, used his books and so forth. What does he say about trust? always affects two measurable outcomes: speed of transactions and cost of those transactions. So when trust goes down in a relationship, on a team, maybe in a company, even in an industry, like maybe we're all experiencing now with a customer or a supplier, the speed of the transaction decreases with it and everything takes longer. So essentially, speed slows down, and we know speed is life in supply chain. Speed slows down, and the cost of those transactions tends to go up. Why? Because time is money. Couple more. Jim talked about Sengi. Pretty much a big picture guy with a lot of methodologies to with the circles and the elements that Jim posed just to you. But systems thinking from his point of view is a framework for looking at interrelationships rather than things, for seeing patterns rather than static snapshots. So we like that approach. And then finally, Ellie, good friend of mine, father of theory of constraints. I'm I'm unabashedly a Jonah, a certified Jonah in the theory of constraints. He's the guy who wrote the goal. What did he say about trust? He says pretty much our fear of complex systems drives what? Drives us to dissect the complex system into subsystems. That's how we're trained, leading to diverting management attention to chase local optima. So we wanted to give you a little bit of a grounding in terms of how other folks in the field perceive trust, and then what we want to do is broach with you our approach to trust. We are calling it the trust molecule. As you can see, it has three elements up on the top, the three dimensions. The balance scorecard on the bottom right is the supply chain management readiness assessment. And then on the bottom left is the pure risk and resiliency assessment. So when you look at the three dimensions and then inject trust in the middle, in terms of talking from a chemical slant, to us, it seems like trust is the catalyst to drive supply chain transparency and resiliency going forward, especially in the VUCA world. Now, in chemistry, we call this picture a fluid dynamic situation. All right. So think of it as a water balloon now. If you ever squeezed a water balloon, what happens? All right. It goes all over the place, bulges out, very tough to essentially keep it within the confines. We think trust is going to drive this fluid dynamic supply chain performance improvement going forward, especially in the volatile times that we are living with right now. So we are working on a concept in a 12-month project. We just started it, culminating in, we hope, an online framework that will provide an as-is status of your trust relationship with either one, two, three suppliers, a customer, but we're looking to develop an online as-is status of your current supply chain trust relationship, and also then provide you a path forward to improve that basic trust, because we think trust is going to be the catalyst going forward. So with that, we'll get into our next section. Jim's going to talk about aligning the SCM assessment tiers 2 and 3 to drive stable growth within the Gartner model. Over to you, Jim.
Thanks, Greg. Yeah, so as the Gartner model we already covered, we're aligning the stages of the supply chain management readiness assessment, the Ring of Fire, Apprentice, and Mainstream, and Exemplar. You can see how those line up to get you over the wall. And then what we did was align our services to provide that assessment. And then on the top here, you can see we're looking at the supply chain risk and resiliency five stages, or in here we've listed the 4 stages because the foundational stage is what we would view as up to mainstream. And then as you move out to the top here, you see all the way through the 5th stage of sustainability. So that gets a little messy. So what we did was we kind of straightened it out, so to speak. We have the 5-stage supply chain maturity model by Gartner. Then we have the supply chain management readiness maturity model aligned to it. And so that when you take the assessment, that's where we think you are. So mainstream is right between a 2 and a 3, and the exemplars are up. They've cleared the wall. So, but to clear the wall and really sustain itself, we feel like the supply chain risk and resiliency maturity model and all the trimmings that come with that, from foundational, visibility, predictability, resiliency, and sustainability, are bringing that risk component to get you over that wall. Those things will help you greatly in achieving that Gartner stage 5 benefits that we talked about earlier, 4 and 5 benefits. So we're really provided a framework to help you in your company move through these stages and reap the rewards of stage 5. The other part of the supply chain management readiness assessment is the benchmarking. And in benchmarking, we always talk about the laggards, average, followers, and leaders, and we break it down by percentiles. And we'll talk a little bit about that. A percentile is 25%. If you had 100 data points, 100 folks filling out the survey, the scores of the 25% lowest would be in P0 to P25, and so forth through the first quartile, second quartile, third quartile, and fourth quartile. So our exemplars and leaders are going to be at the in the first quartile, as we've listed it out here. So however this might be flipped, but the point is that you lay out all your data out in this manner, and you prioritize accordingly. And that's what we've done here with our hundreds of assessments and of 10 years, and putting a stake in the ground of where you're at within your particular industry. And so what we've laid out here is, on the y-axis is the use case, is from 0 to 10, again, 10 being the ring of fire at the bottom and 0 at the exemplars at the top in the distributions that you have. And we see that aerospace is pretty much mid-tier here. Electronics, not really surprisingly, just because of the nature of the business. They have to be a little bit better at their supply chains. And petrochemicals tends to be a little bit worse than aerospace and electronics, as heavy industries are right in there with petrochemicals. So that is a overview on the industry benchmark. So when you do the analysis with your cross-functional team, that's what that would be the output of those graphs. So the question is, what does it take to move from stage 4 to 5? Just some helpful hints here. You'll need that unified architecture across your enterprise, and you taking advantage of stochastic modeling, probabilistic simulations. You've done your enterprise information management, EIM. You've got your integrated systems between the ERM, your warehouse management system, your TMS, that should be TMS, your CRM, and of course, as we talked about earlier, your sales, inventory, and operations planning is always needs to be aligned, and we align that through our partners with real-time digital twins. And then the other thing that is a helpful hint is to move you on to stage 4 and 5. is doing that AI machine learning scenario planning that we often focus on in visibility in the supply chain risk and resiliency, setting up integrated control towers, and setting up those alerts and remedial actions plan. Trust and collaboration is key. We talk about blockchain here and smart contracts, KPIs, and Nexus suppliers, which we'll talk a little bit about in other webinars that we have. And then embed supply chain as a strategic lever, the real case return on investment examples. Of course, that's a key area, as well as overcoming cultural resistance. So embedding change management where change is good and you're looking to continuously improve all the time, and you have a strong leadership program. So those are some of the common threads that we see when moving to stage 4 and 5 that companies that are exemplars are doing. With that, we'll move right back to the tariffs. In light of the tariffs, what actions are being done? So, Greg, do you have any comments on what you're seeing here?
No, again, I gravitate towards supply chain visibility because it's going to be very, very important to stay close to your suppliers and your customers during this, I'll say, tumultuous time. So I'm glad that folks entered that. I don't see any real big. This is kind of a frequency table, folks. So as Jim mentioned, the more you put the same verbiage in, the bigger the font gets. And so we have a lot of equidistant or equal equal pain and challenges. So just an observation. Thanks for engaging.
Yeah, thank you. And I guess from my perspective, from a Lean Six Sigma Master Black Belt perspective, change management, communication, we always think we over communicate. And I think unfortunately, we under communicate, especially in these. We said, well, we have to learn more what the impact is before we talk to our troops. No, that's not the right answer. Go to your troops. Be open with them that that we're all in this together, and the answer may not be as clear as you think it is, but do communicate. You can't over communicate in these kinds of situations. With that, I
Yep.
will turn it back over to Greg.
You bet. We'll talk a little bit about real world case studies in this arena, talking about scaling supply chain maturity, and we think we have a pretty compelling case study to share with you today. So with that, we'll move into the wonderful world of Zara, the fast fashion apparel company. We had an opportunity to work with them in 2015, way back when. They went through the assessment, as you can see on the bottom right. There's their as is situation. They're pretty darn good. This is what, 10 years ago in terms of supply chain process maturity, what they do every day. All right. So they were very close, in our opinion, to being exemplar status. Now, this is 10 years ago. All right. And again, the exemplar status is how close are you residing around the green ring? All right. They had one outlier. You can see that at about what, 5 o'clock on the chart, and that is Infosystems. What does that mean? Well, back in 2015, they had over 25 1970 like systems. COBOL, Fortran. It was a dog's breakfast. We saw it. And those tools were supporting their maturity. All right. So they were very diligent. All right. But they knew that they couldn't survive and do what they wanted in their 5-year plan with those tools. So what they do, because they're innovative, they're agile, and they're adaptable, they are very, very good at that. They took their free cash, which we advocate, cash conversion cycle. We didn't talk about it here. We do in other webinars. If you're not using cash conversion cycle as a measure of your supply chain performance, you should take a look at it. It's free. You can find it on Wikipedia, Investopedia. They have a cash conversion cycle at this time of minus 45 days. What does that mean? That means they're a bank. They're cash flush. It gets 90 to 100 days before between when they get money and very quickly from their customers through credit cards. They have 90 to 100 days before they have to pay their suppliers. That's cash. That's free cash all day. They took it, they improved their processes, and they also built themselves a multi-million-dollar supply chain risk and resiliency war room. We don't have a picture of it in this session, but trust me, it's there. And they monitor their global supply chain 24/7, 365 days for both performance and risk. All right. Now, our tier 2 analysis of the Zara project. They come in as an emerging leader. You can see that in the top right, very close to the green line. So we consider them an emerging leader. We then did a strategic, tactical, and operational calculation. And you can see the three numbers. Remember, the lower the number, the stronger the tenant. All right. So their strength is obviously in operations. They're very tightly aligned between the three categories of strategic, tactical, and operational tenets. But we looked at it as at the biggest opportunity. Where is the biggest opportunity for improvement? And those tenets were the tactical tenets. And so from an industry benchmark, they came in also as a leader. These guys and gals are very, very good at supply chain process management, maturity, and risk management. So let's take a look at a tier 3 picture. Jim explained to you our tier 3 benchmarking, where we look at the organization relative to their industry peers. And in this one, I'm not going to explain the chart again, but you can see the first bell-shaped curve in the middle is retail and all the retailers that are in that industry segment. And then you can see where Zara resides. And they're pretty much driving retail performance. Everyone else is still chasing and trying to replicate the approach that Zara takes to supply chain management, marketing, and risk management. So pretty good positioning for Zara as we know it today. And then we have a couple more pictures of what you can get out of the supply chain management assessment tool. That's called Tier 3. We also ask a host of additional questions in Tier 3 across the 13 tenants. And we ask questions about how important, in the middle, how important are these tenants to you? All right. And so you can essentially see that we codify them. And then in the yellow area, that's more or less how the tenants are prioritized in terms of their current process capabilities. And then we also ask another question. How satisfied or dissatisfied are you in terms of the performance of that tenant? And the same thing, we codify it, we put benchmark charts together, we take the two answers and move them over into maybe top 2, top 4. In this case, Zara chose these top 4 tenants to focus on. And obviously, the number one focus was info systems, which they've done. At the moment now, they communicate with their suppliers and customers every hour of every day on 5G phones. And so they've reinvigorated and re-implemented and upgraded their IT systems. That's how they communicate. Jim talked about over communicating. They communicate directly over the phones with their customers and essentially with their suppliers as well. So the last outcome of a fully engaged supply chain management assessment tool is the Persona Action Plan. This is for Zara. Over in the top left, we'll do a recap. They are a leader in terms of best-in-class practices for supply chain. Their strength is strategic, all right, and where are they positioned in their industry? They're a leader, all right. Then the action plan came from the tool. It comes from the algorithms, and these are the 4 action plans or 4 action items that were suggested, and I'll give you an update. 1, focus on IT systems. They did that. They wanted to do it over the next 3 years. They did it, and they're doing it. They're upgrading it every day. They develop a supply chain risk and resiliency war room. They took it upon themselves. They took their free cash and they do it. They have it and they monitor it every day, 24/7. Revamp their supplier risk relationship management protocols. They agreed and they upgraded the initial connections, and they're still doing it today. And then finally, review your existing supply chain design to better optimize deliveries, grow market share. They agreed, they did it. Actually, they have brought several manufacturing capabilities and contractors back home to Spain and Portugal, and they're still reviewing their supply chain nodes and lead times and so forth every day. So what did the VP of supply chain say when we left? Supply chain readiness assessment was a critical factor for them. Before the assessment, they felt they had a fairly robust supply chain approach. They said the tool was a terrific validation of our weaknesses across our supply chain, and you can see the rest. So pretty much a company who has moved from stage 4 to 5, in our opinion. We wanted to share that with you. So I'll turn it back to Jim.
Thanks, Greg. And we'll close out today with the profit pathway. And we'll just get right into it. Risk priorities, we show this chart every time, and this is aligning stage 4 to 5. And we've already discussed many of these areas, but where I've seen it personally is you'll see revenue growth and higher margins, but you'll get top line. Why? Because you have market share, because you're the best one on the block. So you're able to even buy up your competitors, you're cash rich. You are able to perform well on EBITDA and your capital management improvements. So when you are investing in capital management, you are able to get that return much faster at this stages, and they increase net pricing. So you're able to even increase your price. So you're gaining market share and you're increasing your price and you're increasing your margin. Those are what those exemplars are doing. And that's why they're cash rich when it comes to these achieving stage 4 to 5. Of course, they're not going to have the stockouts that the peers have. Why? Because they've been able to manage proactively, and their return on the capital is very high, freeing up cash. So that this is a overview, quick overview on some of the priorities and impacts of moving from stage 4 to 5, right to the bottom line. And then we'll go into some helpful hints. Kick it off with Greg.
You bet. We'll talk about the top left again in supply chain management. Think about these things. Think about end-to-end super AI-driven collaboration. It's coming, folks. It is coming. We're going to be in Amsterdam in a couple of weeks. Jim and I are going to talk about AI ML algorithms being utilized throughout the entire, all disciplines in supply chain. It's coming. It's here. Continue to benchmark yourself, maybe in our supply chain process maturity against your peers, utilizing tiers 2 and 3, because this, folks, is when action begins. When executives see where they're positioned within their own industry against their peers, that gets them excited. Next, and finally, embrace additional technology. AI ML, it's here. to accelerate speed of your supply chain, because as Kobe said, and we say it every time, speed is life in supply chain and time is money. On the right-hand side, supply chain risk and resiliency, different twist. Industry benchmark your supply chain risk and resiliency maturity capabilities. How do you do that? We are going to launch a free portion, the 5-stage model you saw in the presentation. We're going to launch that in a couple of weeks, hopefully, and it's going to be free so that you can go through the questions of discovery and get a sense of where you are relative to the 5 stages of supply chain risk and resiliency maturity. Leverage your risk alert system. If you don't have one, take a look. They're out there. They're not super expensive. They're outside in. They give you risk issues across the globe that may impact any node in your supply chain. Think about that. Then maybe leverage our free online trust matrix. That's coming probably in the third quarter of this year. That ought to be very interesting to get a sense of, almost a heat map, to get a sense of the trust, what trust looks like within your supply chain, node to node, supplier and customer. So with that, I'll turn it over to Jim.
Thanks, Greg. And just a few more thoughts here on the balanced scorecard. From a financial, people, internal process, customer, and supplier perspective, you can see from a financial perspective that strategic acquisition planning, financial readiness, discounted cash flow, these types of things are driving, of course, that positive people culture, internal processes. You have end-to-end real-time visibility, and of course, you're customer centric. The bottom line on balanced scorecard is win-win-win across the board. That's when you're at stage 4 to 5, where you're not fighting between these 5 areas that you're often doing at stage 1 through 3. You're going, oh, it's a finance decision. Oh, it's a HR decision. No, in a stage 5 company, these companies are working very coherently together across all of these different areas, and your suppliers know your customers and vice versa. Everybody's working together as a team. It's an ecosystem. From a Gartner perspective, again, this real-time information flow of collaborative platforms is key. We talked about that. The value chain integration and joint innovation, predictive analytics, and we'll move right through sustainability. And yes, I mean green here, and ethical sourcing. And Gartner talks about supply, customer-centric, employee engagement ecosystem, which breeds trust. So everything leads to trust, as we say, right, Greg?
Yipper.
So with that, we have a surprise for you for the folks that stuck with us past the hour. And what can you do? Where you're positioned today? We put together this slide here of the stage 5 for each stage of the maturity model. What's the cost impact, margin impact, growth impact of the tariffs? So if you're in stage 1, you're kind of pretty much saying, hold on, I wonder if we'll survive. And you're right. I wonder if you will survive also, because you're not mature. You're not ready for these types of things. If you're at stage 2, you're going to go and hold on. I hope we'll survive. Stage 3, we're stabilizing. We got a handle on this, but don't drop the ball. And stage 4, as we can see ahead, we can move smart and fast. And stage 5 is like, this is fantastic. Oh, more companies to buy, because all those other companies, stage 1 companies, are going to go out of business. And so what can you do depending on where you're at on this? So if you are stage 1, don't give up. Do some continuity planning. You can power through it. Get everybody aligned. Stage 2, diversify your supply base. Make sure you understand where you're at today and where you can have some flexibility. Stage 3, you need to invest in your people, in your technology, and get those high ROIs. There are lots of high return on investment types of activities you can do if you're at stage 3, where you'll get more money investing in yourself than you will investing in the stock market, that's for sure, because it's so volatile. So this is a time, if you're at stage 3, to invest in yourself. In stage 4, if you're moving fast, you can start working to build trust, uh, build that trust matrix, enhance your transparency even further than you thought. And then stage 5 is leverage that trust that you have throughout your network for strategic growth, and look for those buys, because there's going to be lots of low-hanging fruit companies out there. So that's the conclusion of the webinar. Hope you found that interesting and helpful. With that, I think we hit all our deliverables, but please do ask any questions in the chat or follow up with our next webinars. Greg, any closing thoughts before we shut down? We will have
You bet. No. Yep.
I'm sorry, we have one more webinar on the 29th in this series.
Yep.
I forgot to mention. So that'll be a lot of fun. With that, Greg, now final thoughts.
You bet. Well, we hope we gave you some helpful hints here in terms of stages 4 to 5 and how you can move forward. Feel free to get into our website, use the free supply chain readiness assessment, get yourself an as-is picture to help you. It's a good dialogue starter. Look forward to our free risk and resiliency maturity assessment. That'll probably come out in a month or so. And then the trust matrix will probably have a soft launch somewhere in June and a hard launch in third quarter. So some exciting things to help you help yourself navigate through this, I'll say, volatile time period. So thanks for engaging with us.
Yeah, and I want to thank everyone for sticking on here, and we appreciate your feedback and comments in the chat, and we look forward to future webinars. And no matter where you're at on this 5-stage maturity, there's always things to do that you can take advantage of these times. And if you're not that mature, just remember you can over communicate and you can get a lot done just by getting everybody on the team together and rowing in the same direction. With that, we'll sign off for today, and we look forward to our next webinar at the end of May. All the best.